So this was a trade that I took today on the evening Nasdaq, and I want to go and start on the daily because when I came to the market on this daily, we were actually at the we were up in here in this area, so we were all the way up in here, and so we pretty much filled in this gap. Now we didn't fill it in all the way, and there's still a possibility that price could come and fill that gap back in, but we came up into this area. Not only that, but we came up into these down closed candles, and really we could look at this one candle, but these two candles right here is an order block. Now you can also look at this last up close candle as an order block as well. But we're running into an order block where we've pretty much filled in this daily city. And so when we go down to the 1 minute time frame, originally I was going to look to buy. I was going to look to buy here in this area. And I was like, okay, I want to see it come down to equilibrium. So I took my fib from the low to the high. And I was wanting to wait for it to come below this area, maybe come down into this area right here, these 3 consecutive down close candles. And, play off of this level. But this is why it's important you keep going to the higher time frames, because I went back to the higher time frame, and this is actually still the same candle. The candle was wicking out. And so what I understood about when it was wicking out like that, it's not just about the setup, it's also about how does the higher time frames look when the setup forms. So like sometimes you get a setup like that was like if the hour candle did not look like that, say we got an hour candle, say this previous hour candle would have closed above, then I would have been more inclined to take this type of setup here because price already has shown that it wants to close above the CE, and when we get closest above the CE, usually it tends to want to go and fill in the rest of the gap. But we didn't get that there, and so we were wicking out on that hour time frame. So I knew that this probably wasn't going to be the place to buy. It probably wasn't going to be the place to buy. And so I waited, and then I seen how it broke through this structure. And then I was kind of looking at this area as like a bearish breaker. And so I was like, oh, okay, I'm going to take this. And so I took it as price pushed up into this area. Obviously, it's not going to get you in exactly where you want to be in at every single time. And so I took the entry, and then I ended up taking it in anywhere from 20 to 25 points. So I made about 415 today as the profit. And I didn't even take the full thing because I'm not looking for this thing to go 70, 80 pips. I'm only looking for where I'm coming from. I'm only looking for my portion, and that's 30 points. And I didn't even get that. I took a little bit less than that, and I'm okay with that. I don't need to come to the market and grab a certain amount of money, a certain amount of points every single day. As long as I'm consistent, as long as I'm compounding, because that's the thing. You gotta understand the power of compounding. As long as I'm compounding, that's gonna build my account. It's going to keep growing, and it may seem like it's slow in the moment, but when you look back from a week or 2 weeks from now, you'll start to see how that compounding interest really starts to add up, and it starts to have that momentum to it. So those are the trades. Well, that was the trade that I took today. I may take another trade, but honestly, I'm probably most likely going to be done. But if I do take another trade, I will record it and everything.